Welcome to DebtCircle Key Roundups coming to you on May 8th, 2026. I am Vijendra.
And I'm Leela. Today we're diving into some major developments shaping India's financial landscape, from offshore funding and bond issuances to currency pressure, banking liquidity, and corporate refinancing challenges.
Axis Bank has secured a $500 million offshore loan from Mitsubishi UFJ Financial Group for 3 years, priced at the secured overnight financing rate plus 85 basis points, while the Reserve Bank of India is expected to keep the repo rate steady in June amid energy price shocks and El Niño risks.
And that cautious stance comes as Indian banks continue balancing strong credit demand with tighter liquidity conditions. Loan growth across the sector is running ahead of deposit growth, forcing lenders to diversify funding sources and manage liquidity more aggressively.
Exactly. Axis Bank's loan book grew by 19% to 12.3 trillion rupees, while deposits rose 14%, highlighting why offshore borrowing and strategic liability management are becoming increasingly important for major Indian banks.
That investment is particularly significant because refinancing delays and high rupee hedging costs have already pressured Goswami Infratech, leading to a downgrade from BB- to B+ by CareEdge ratings. BlackRock's participation could encourage more global investors to step in.
Staying with corporate stress stories, Jaiprakash Associates Limited has defaulted on both interest and principal payments tied to borrowings totaling 55,357 crore rupees as of April 30th, 2026, despite the National Company Law Tribunal approving an Adani Enterprises resolution plan earlier this year.
The continued defaults underline persistent operational and cash flow pressures. Creditors are closely watching how the Adani resolution plan progresses because delays or execution risks could significantly affect recovery prospects and business revival efforts.
On the fundraising front, State Bank of India plans to raise up to $2 billion through foreign currency bonds during fiscal year 2026 to 2027, helping diversify funding sources and optimize liabilities amid changing market conditions.
Even with strong quarterly profits, SBI is also navigating near-term challenges, including a planned 2-day staff strike later this month, which could influence operational stability and investor sentiment during this important capital raising phase.
Corporate bond activity remains extremely active. Lloyds Metals and Energy raised 7.5 billion rupees through a 6-year bond issuance carrying an 8% coupon and AA ratings from CRISIL and India Ratings, attracting strong investor demand from the very first day.
At the same time, Master Capital Services Limited is listing 300 crore rupees worth of non-convertible debentures on both the National Stock Exchange and Bombay Stock Exchange, offering an 11% annual coupon and giving investors another high-yield fixed income option.
Indian banks, however, are expected to see credit growth slow to between 12 and 13% by fiscal year 2027, as weakening demand, tighter liquidity, and shifting household investment patterns reshape the financial system.
Households are increasingly moving money away from traditional fixed deposits toward financial assets, supported by more than 18 crore demat accounts and monthly systematic investment plan flows exceeding 32,000 crore rupees.
That shift is also pressuring banking profitability. Net interest margins are expected to compress by 10 to 15 basis points, forcing banks to rethink deposit strategies as the era of cheap current account savings gradually fades.
In contrast, some non-banking finance companies are demonstrating strong financial discipline. Sammaan Capital prepaid 27.31 crore rupees towards secured redeemable non-convertible debentures 1 day ahead of schedule, reinforcing confidence in its liquidity and debt servicing ability.
M&M Financial Services has also approved a 1,000 crore rupee secured non-convertible debenture issue with a fixed coupon of 7.71% per annum, structured with strong investor protection measures, including asset-backed security and penalty provisions for defaults.
Investors continue favoring secured debt instruments with stable returns, especially when issuers provide clear security structures, strong governance standards, and compliance with SEBI regulations.
Turning to currency markets, the Indian rupee opened 33 paise weaker at 94.58 against the US dollar after Brent crude surged above $101 per barrel amid renewed US-Iran tensions and disruptions around the Strait of Hormuz.
Since India imports nearly 85% of its energy requirements, rising crude prices sharply increased the import bill and widened the current account deficit, forcing the Reserve Bank of India to intervene by selling dollars to stabilize the rupee.
Analysts now expect the rupee to hover near 95 against the dollar over the next year, with geopolitical tensions, oil volatility, and foreign capital outflows continuing to pressure the currency despite occasional rebounds.
Overseas borrowing is also accelerating among Indian financial firms. Piramal Finance plans to raise up to $1 billion in foreign currency loans with tenures ranging from 3 to 5 years to support expansion in mortgages, used car loans, and retail lending businesses.
And finally, Mangal Credit and FinCorp has approved a 30 crore rupee non-convertible debenture issue in 2 tranches, offering an 11.75% annual coupon, backed by secured receivables and structured repayments, highlighting the continuing strength of India's corporate debt market. Stay tuned to DebtCircle Key Roundups for more updates shaping the markets and the economy.